Welcome. Wanted to take a few minutes to run through the midterm and figured I would rather make a separate video specifically related to the midterm itself as opposed to mixing it in with the upcoming lecture on consumer purchasing strategies. So I wanted to also just remind everybody that the reason why I don't curve exams is because I always allow you the opportunity to go back to the exam and correct the mistakes that you made. And one of the reasons that I do this is because once you leave the walls of academia, um, yes, mistakes are going to happen. But sometimes we don't get the opportunity to go back and correct the mistake before the mistake has already taken hold in whatever project we're working on. And flow through errors are the biggest reason for projects falling apart or deals not being valued properly or overpaying for an investment or a company. If we make one mistake within the spreadsheet, sometimes that one error carries through to 3, 4, 5 different places. Okay. And so one of the reasons why I give clean grades is so that we can see the impact of where flow through errors make their way through so many other aspects of the exam. Okay. But that's also the reason why I give you the opportunity to go back and rework your responses to get the points back. Okay, so it's a lesson that I'm trying to help you understand and help you learn by offering you the opportunity to see your clean grade and then the subsequent opportunity to go back and correct your mistakes. Because there are sometimes there will be deals that get done and maybe you potentially overpaid by hundreds of millions of dollars simply because of a spreadsheet error. And I've seen it happen. Okay, so let's just work through the exam real quick. I was really pleased to say that most everyone, almost the entire class, was very successful in parsing through the information that was just kind of thrown at you in random form that related to the balance sheet and income statement or cash flow statement, sorry. So everybody did a really great job on that. And I will also say that most everybody did a pretty good job of organizing the assets in order of liquidity. Okay, and we'll see here in a second why that's so important. There are a couple of you that included some cash flow items within the liabilities, like rent, the rent payment itself, or the credit card payment itself. Just remember that those are not balance sheet items. Those are operational items, and those fall in the cash flow statement. So, most everyone was able to piece together the balance sheet very, very well. Okay, and most of you isolated it in terms of liquidity, most liquid to least liquid. All right, so great job on that. And everyone was able to get the math right. Assets minus liabilities is net worth. Really good job. On the cash flow statement, okay, or income statement, all right, most everybody did a great job. And I would say there was really only two mistakes that were kind of made in the cash flow statement, and it would be on the expenses. And the mistakes that were made here were the two same mistakes consistently throughout the midterm, and it was considering internet to be a variable expense, and it was considering credit card payment to be a fixed expense. Your credit card payment is not a fixed expense because you have control over how much you pay every month. Okay, so it can vary depending upon whether you have no balance or whether you carry a balance and how much you're paying off your balance each month. So it is considered to be a variable expense. And your internet bill is also considered to be a fixed expense. Why is that? Well, it's because it doesn't change based on your consumption. Okay, and I'm not talking about renting movies and using your Apple TV Plus and getting a subscription on HBO and things like that. That's kind of classified in this entertainment line item. This is just purely the base monthly rate for having the internet connection coming into your house. So that may have been part of the confusion there. Okay, but other than the internet and credit card payments kind of being flip-flopped. Everyone else was able to really identify the fixed and variable expenses. Great job. Okay. The second mistake that was made was just, I'm just going to say it was a boneheaded mistake, and just not doing the math right. You had the right wages and you had the right deductions, but you just calculated net wages incorrectly, and then that flowed through everything below and hit you on the total on the disposable income. So you lost a few points there. So that's an easily fixed mistake, but it's also a mistake that in my opinion never should have happened, because it's just basic math. Okay. So everyone did a great job on those. Okay. Now we get over to the not multiple choice, the next section of the midterm, dealing with some of the ratios. And from looking back on some of our lectures, and I rewatched the lecture that we did where we would have covered some of these lectures, and I did not spend a considerable amount of time going through a lot of these ratios. I know we briefly talked about it. We spent some time talking about which ones were going to be on the midterm, okay? But based upon the majority of the class did not answer questions 1 through 5 correctly. Okay, so I take responsibility for that and not spending more time on those ratios during the first part of the semester. But nonetheless, I'm going to give you the opportunity to go back and rework them so that you can get those points back. All right. So let's talk about debt ratio. All right. Debt ratio is liabilities divided by net worth. Okay. That's it. Liquidity. So again, liabilities divided by net worth. Okay. Liquidity. All right. What is the liquidity ratio? Well, liquidity ratio is the current assets divided by your total expenses. Current assets. Well, if we remember from the calculations from the balance sheet, current assets are only our liquid assets, and our liquid assets are only our checking, savings, and emergency fund. Okay, those are our liquid assets, right? So the liquidity ratio is the sum of the current assets divided by your total expenses. Okay. Well, what is that telling us? Well, it's basically telling us how much of a cushion do we have that we've saved up? How much of a cushion have we built up to cover our expenses? How many months of expenses do we have saved up, okay, in our current accounts? Okay, so that's kind of what it's telling us. How many months essentially do we have as a backstop for our monthly expenses? Debt payments, okay? The debt payments ratio is simply the sum of all of your debt payments divided by your net wages. In these next 3 questions, okay, the mistake that was made was that you were using gross wages instead of net wages, okay? We use net wages when we're in the calculations for these ratios, okay? So debt payments, we're only looking at the monthly payments that are associated with our debts, okay? And so what are our debts? Well, our debts are our credit card, our student loans, and our car loans. So what monthly payments are associated with those debts? Well, you've got your car payment, you've got your student loan, you've got your credit card payment. So the debt payments divided by net wages is your debt payment ratio. Your housing ratio. Again, most all of you were able to do the math, right? You took the rent and you divided it by gross wages and you came up with a housing ratio that was based upon gross wages, okay? And it has caused me to rethink the wording on some of these questions within the exam for next semester, just to be a little clearer with everybody that we're dealing with net wages instead of gross wages, okay? So, and the book presents it both ways. So again, I'm not faulting anybody for doing it the way that they did it, because that was the way, one of the 2 ways that the text presented it, and it was not the way that I was expecting you to deliver it on the midterm. but I also wasn't very clear on how I was expecting it. So again, I'm not going to, fault anybody but myself for not making that clear. So the housing ratio is simply rent divided by net wages. The entertainment is entertainment divided by net wages. Okay. Then we got into the question around Albert and how much he needed to deposit today in order to achieve his goal. Okay. Well, this is a basic PV formula. So we got, equals PV. Okay. We're given the rate of return. Okay. We're told that it compounds annually, so we don't need to adjust the rate or the time period. We're told that he wants it in 4 years, and we know that he needs $10,000. Okay. So we've got our rate, which is the first variable within the PV function. We've got our number of periods, because that's the second variable within the PV function. We don't have a payment, so we just comma out of that. And then we have we're searching for PV. So we have our future value, which is a positive $10,000, and we're done. Close down the parens and you get the answer to number 6. Okay. Question 7. Okay. Obviously he's got enough liquidity, okay, because you can look to see what his liquidity is with his current assets. Okay. And the number that you calculate for the PV will obviously be less than the sum of all 3 of those. And so yes, he's got enough liquidity. Question 8, right? What is Albert's new liquidity ratio? Well, you've already calculated the liquidity ratio, okay, because you isolated the current assets. So all you got to do is take the sum of those, okay, figure out what his new current asset value is going to look like if you remove that lump sum payment that you calculated in 6. So take your current assets and back out that lump sum payment. Now you've got your new current assets, your revised current assets, and just divide that again by the total expenses to get your new liquidity ratio. Question 9, okay. We're using the equals PMT function within Excel. Okay, so after you know what the lump sum is, okay, you calculated that. Okay, now we want to know what's the monthly payment option for it. So you're going to use the equal PMT function within Excel, okay, to go through and figure out what his monthly payment is going to look like. Okay, so we know that in question number 9, the rate is the same, 6.5%. We know the number of periods is still 4 years. Okay, we know we're now dealing with monthly compounding because it tells you that he's going to be making monthly payments. Okay, so those are the keywords to trigger your brain and to recognizing that it's monthly compounding. So we adjust the rate for monthly compounding. We adjust the number of periods, 4 years, to be monthly compounding. Okay, we know what the present value is because it tells us in question 9 that he's going to put $2,500 towards the goal. So remember, present values in PV function calculations are negatives because Excel views them as cash going out the door. So the PV is negative 2,500, and you know the future value because that's what he needs to save up at the end of that 48th compounding period. Okay, once you put those four variables in, just close the parentheses down and you're finished. Okay, and that'll give you the payment in terms of monthly compounding. Okay, question 10. There was really no right or wrong answer here. I just wanted you to decide one option and then justify your answer to that. Okay. All right. Now we get into the tax calculation. And I was really, really pleased with the vast majority of you in class. You really did a bang-up job working your way through the 1040 and getting to the final answer as it relates to, is he going to get a refund, okay, or is he going to owe the government money, which was question 21. So this is what I was referring to at the very beginning of our discussion here, is that if you made a mistake, for example, in calculating the W-2 wages, okay, or the dividends that he received, or the student loan, or if you made a mistake in any of the questions 11 through 15, okay, you got 16 wrong. okay? And if you made a mistake in 13 through 15, okay, you would have gotten 17 wrong, okay? And if you got either 16 or 17 wrong, you got 18 wrong. And if you got 18 wrong, you got 19 wrong, you got 20 wrong, and you got 21 wrong, okay? So if you made a mistake in questions 11 through 21, there were definite flow-through errors that resulted in multiple points being taken off simply because that one error made its way through 2, 3, 4, 5 other questions. Okay, so by going back and fixing that one mistake, you'll be able to get those points back pretty easily. Okay, so W2, all right, what are his W2 wages? Well, we're told he makes $7,000 a month. All right, so we just 7,000 times 12, done. Question 12 was, how much dividends does he get? Well, he gets 80 bucks a month, so 80 bucks times 12. We know we've got, so question 13, student loan interest projection. He pays 200 a month, so 200 times 12, done. 401k, question 14, all right? He's contributing at a rate of 10% of his monthly wages. Okay, so 10% of 7,000 is 700. Okay, that's $700 per month. Okay, some of you made that mistake because you just used the monthly number when you plugged it into question 14. You got to go annual, so it's 700 times 12 is the answer to 14. Okay, HSA, 2% of monthly wages, so 2% of 7,000 times 12, and then your income. Okay, what is his income? Well, it's the W2 and dividends, right? The adjustments are only the student loan, 401k, and HSA, right? So the sum of those gives you your adjustments. Your AGI is income minus adjustments. And most of you were able to know the math. It was just your inputs were wrong. Okay. What's his taxable income? So we factor in what the case study tells us, that he's going to file single with the standard deduction, and that gives us our taxable income. Okay, so AGI minus the standard deduction gives us our taxable income. And then we move into the marginal tax table, where based upon his taxable income, we find out what marginal tax rate we find himself in. Okay, and then we start calculating the layers of tax that go along with Albert's taxable income, adding up each of the 3 layers to then determine what his tax due is. Okay. And then we're told that he paid $8,000 in taxes, and we're basically asking, should he expect to get, in question 21, should he expect to get a refund, or should he expect to owe the government money based upon your projected tax calculation for question 20? Okay, so he paid $8,000 in 2018, or in the year prior, 2019. Okay, and you're projecting that he is going to owe tax in 2020. If that tax is greater than what he paid in 2019, he will obviously owe. If it's less, he would get a refund, and then by how much. Okay. Now, most of you got the mathematics correct. It was simply the inputs to these responses that threw you off. Again, flow through errors hit everybody pretty hard if you made a mistake in questions 11 through 21. Okay, question 22, 23A, and 23B. All right, most everybody did a great job on that. I mean, I recorded an entirely separate video specifically dealing with these 3 questions. So if you did get those wrong, just go back and watch that video, and you'll pretty much see exactly where the mistakes may have been made and how to go about fixing them. Okay, and then finally, the last question, the SMART question, a SMART goal. And I was a little bit disappointed, okay, in responses to this question, just a little. I would say about half the class actually did what I asked, and it was write down SMART and give me a response for each one of those different variables. Okay. Some responses were like, well, Albert needs to save more money and cut back on his expenses. All right, well, that's a goal, okay? But or it's not even a goal really, it's more of an objective, okay? But it's not SMART, as in capital SMART, okay? It's not specific, it's not measurable, it's not action oriented, it's not reasonable, and it's not time-based, okay? So if you got points taken off on this final question, you got points taken off because you literally did not go and write down each letter of the acronym and give me a response for each letter, okay? I know it sounds silly, but if you can get yourself disciplined enough as you're creating your own goals for your own financial plan, okay, using the SMART method is very, very effective, okay, because it doesn't give you any wiggle room, doesn't give you any gray area. It establishes a very, very, very obtainable objective goal for you, okay? So if you're going to go back and you want to get some points back on question 24, okay, you need to write down literally, like I'm going to do it right now, and I'll show you what I'm talking about. Okay, so SMART, okay, and give me a response for each one of these 5 different variables, okay, and you'll get your points back for that. All right. Okay, so there is the midterm review. Okay, I'm not showing you the answers to what's in here, okay, because I want you to go back and rework it yourself. But if you go back and you rework it based on everything that was just reviewed, okay, then you should be just fine. All right, I went ahead and showed you kind of the fill-in for the balance sheet and the cash flow statement because 99% of the class did a bang-up job putting all of those together. And again, the mistakes were just simply flip-flopping literally the same one. So it was no one flip-flopped anything else other than internet and credit card payments, I don't believe. Okay. All right. As you're going through the rework, if you do have any questions, please reach out. Okay, please reach out, and I'll be happy to walk you through any questions that you got. Especially on the PV and equals PMT or equals NPER Excel functions. How you input the variables into those functions is important because Excel sees those variables in certain ways. Okay, so if you've got any questions about that, please do reach out. Okay, and if I start to get multiple questions about the same thing, I'll make sure to publish the response to everyone on our Moodle page. Okay, so thank you for your understanding. Have a great day. And if you have any questions, please let me know. The deadline for submission of your midterm rework, okay, will be next Tuesday, prior to our lecture, okay? Prior to 6:30, and I will have a assignment folder put up on our Moodle page for resubmissions. Those of you that wish to take advantage of the opportunity. Okay, take care. Have a solid rest of the week.